Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. The markets are back open. What are they doing? Well, the Dow Jones is up about 100, NASDAQ down a little bit. Actually not doing much yet. It's kind of the calm before the storm. And this week I do believe we're going to get a storm. We got the Fed coming out with the interest rate announcement. We got earnings reports coming out. A lot of earnings this week. It can move the market in either direction. I do believe we will see a lot of volatility. Now, I'm still betting that we come back down to retest the recent lows. I see some gaps down below that need to be filled. Now, will we hit the recent low in June? Will we break through that low? That remains to be seen, but I do think we're going to get a pullback in that direction and retest that low. Now, before we move on to the real estate market, I just want to thank all of you for being here. Seriously, do not try to talk to your friends and neighbors about this stuff. A lot of them just do not understand. I am amazed at, the financial illiteracy of our country. I mean, these are college-educated people I'm talking to. None of them know what the national debt is. None of them know what an unfunded liability is. Most of them think inflation is not a bad thing. They don't see it as a tax. They don't see it as a burden on society. Look, inflation has destroyed many countries, and it'll probably destroy the United States in time. Now, I'm very pro-United States. I mean, we're going to get a big crash, a big flush out someday. I mean, they postponed this for much longer than I thought they could. But a lot of people think that there's nothing wrong, that they think that nothing big is coming, that they think that there is never be a crash, that things will just continue to gradually move up. They think that the Fed is in control, and they believe everything the Fed tells them. They believe the unemployment rate to be 3%. They believe inflation rate to be 8 or 9%. We just have a difference of opinion. Now, we don't have to agree on everything. I don't get everything right. I get a lot of stuff wrong. But the fact that you're willing to listen to this stuff, it makes me happy. Anyways, we have a small group of people here, and I think we're mostly financially literate. And that's important to know what's going on in our country so we can see what's coming in the future. And now maybe I'm a little bit negative on what I think's coming in the future, but I just think that we should be prepared and we should know about this. Now, when I talk to my friends, I lose a lot of them. They just get very upset. They don't want to hear my opinions, but I'm glad you're here to listen to my opinions. That's all I want to say. Let's get into the real estate market now. I'm talking that there's going to be a fire sale coming in the real estate market. Now, a lot of people don't believe this. Now, where do I see the fire sales starting at? Well, actually, I see it starting in the new homes, the home builders. The home builders are building more homes than they're going to be able to get sold. And in a lot of areas, they're already having price reductions of 10, 20, even 30% already. But a lot of these, they try to disguise these price reductions. Now, the reason they try to disguise them is because people have already bought in their subdivisions. Let's say they have a subdivisions of 100 homes, and let's say they got 20 of them already sold at the price up here. Now, they can't get any more to buy at the price up here. So what do they have to do? Well, they have to start to give things away for free. They have to give you a credit for closing costs. Say they credit you 10 grand for all the closing costs. They give you credit for upgrades. They'll upgrade anything you want right now. They'll put a swimming pool in the backyard if you want, just to get the home sold, and they probably won't even charge you for the swimming pool. I'm just saying that these upgrades are really price reduction, because the people that bought early, they didn't get these upgrades. But the people that are buying late, they'll do anything to get you into the home because they're kind of stuck with these homes. And if they reduce it, let's say, let's say Leroy just bought at $1 million, and now the next guy is only willing to pay $900,000. Leroy is going to be a little upset. That's all I'm saying is Leroy's going to get pissed, right? Because he didn't get the swimming pool pool in his backyard. He had to pay the top dollar, and the next guy coming in is, $100,000 less. But the home builders, they have to dump these houses. That's what they do. They have their own financing on these houses that they have to pay back. And it's not 30-year financing. It's very short-term financing. And that's why they want to get these homes sold quickly so they can pay back their financing. They don't have that debt to carry. But I think the home builders are going to be first to have that fire sale. Now, who do I think is going to be second? Who do I think is going to be second? Well, let's think about it. I actually think it's going to be investors. Now, why do I think it's going to be investors? Well, investors make up about 25% of home purchases, right? But this number is declining. The reason this number is declining because profits are declining. Now, I know a lot of you thinking, well, Mike, home builders, look at. I mean, what? Blackstone just raised $50 billion, right? They just raised $50 billion, and they're sitting on this $50 billion, and they're ready to pounce on this market as soon as it starts to collapse. They're going to come in and sweep in and buy all these things dirt cheap. Maybe, maybe not. Look, the profit margin is shrinking, right? Because, well, the price is high. The rents, even though rents are high, a lot of people aren't paying rents, so they're losing money in collections. They're losing money in having to evict tenants. The investors are getting bigger headaches for less money, and that's why a lot of investors are going to back out. Now, there's 20 million homes that are owned by investors. Let's say 10% of these people decide to sell. Well, that's 2 million homes, and that's what I'm talking about. I think they're going to be the next one in line for the fire sale. Now let's talk more about this Blackstone company raising $50 billion. Now, do I think it's fair that they come in and they buy all the houses? Look, a lot of people think that I'm against free markets because I want to put a tax on institutions to buy houses. I want them to pay double or triple in the property taxes. I'm all for free markets, but this is anything but a free market. People think we have capitalism in our country. We do not have capitalism. Maybe we have crony capitalism, if you want to call it that. Look, at the people closest to the Federal Reserve get money very cheap. Okay, so Blackstone, Blackrock, they get money at 1%. Maybe they're raising them up to 2% right now. But me and you, we were paying 3% when they were paying 1%. Now we're paying about 6% on mortgages when they're paying 2%. You see, it's not a level playing field. Now, if you have a free market, you have a level playing field. But what the Fed is doing is holding rates artificially low, giving money, handing it out to the Blackstones, the Blackrocks of the world, and then they come in and steal all the houses from the general public. That is not a free market in any way, shape, or form. I believe in free markets. I really do. But if you're going to give Blackstone and Blackrock all this cheap money to go out and steal houses from the general public, yes, I think they should be taxed at a higher rate. You got to do something because the government has created this problem. The Federal Reserve's created this problem by the printing of money, by holding interest rates artificially low. And that's why these Blackstones and Blackrocks of the world can come in and steal the properties from you and then rent them back to you. See, what is that? You'll own nothing and you'll be happy? Really? You want to be a renter all your life? Do you want Blackrock and Blackstone in there stealing your houses? In my opinion, that's actually what they're doing. They're stealing them. They're stealing them with the money they get from the Federal Reserve at 1 or 2%. And me and you, we have to go out and pay 5 or 6 or 7% to compete against them. Not a fair market, not a level playing field. They should either be banned completely or play at a fair game. Now, as long as they're printing the money, as long as they're handing it out to their closest friends, which are the Blackrocks, the Blackstones, the Goldman Sachs of the world, the J.P. Morgans, then it's not a level playing field. And sometime this should just be stopped. Now, that's just my opinion. Now, this housing market thing, right? Now, we're not the only country where the prices are starting to go down. The prices are starting to go down all around the world. This is a world problem. It's a big problem around the world. Now in Canada, they're having these price reductions. Why? Because they're raising interest rates, okay? Australia and New Zealand, they're starting to have price reductions. You have the working poor right now where they have a job, but they live in their car because they can't afford a house. And they're raising rates in Australia now. They're planning to do it six more times this year. 6 more rate hikes this year. That's going to put downward pressure on the housing market. The housing market's been inflated all around the world. And the problem is going to get resolved. It's going to get resolved with higher interest rates. It's going to get resolved when we get back to normalcy, where we get back to that level playing field, where we get back to the free market system that does work. Now, a lot of people say my capitalism doesn't work. Free capitalism works. Crony capitalism, I'll be the first to agree with you. It doesn't work. And if you think we have capitalism in the United States, you would be very mistaken. This country is run by the Federal Reserve, printing of money, keeping rates artificially low at 0% for the last 12 years. And this has pretty much caused all of these bubbles that we have right now in the stock market, the housing market, all of these debt bubbles, because when the money's cheap, people just go out and get as much money as they can. And the Blackrocks and Blackstones are getting 50 billion, 100 billion. They're ready to buy any asset they can get their hands on because they think the bubble's going to inflate. But now, wait, not so fast. What happens when the bubble starts to pop? When the bubble starts to pop like the housing market, they're going to run for cover. They'd say they got 50 billion ready to buy, but I think they're going to be running for cover because they own a lot of these homes already, and they're going to see their profit margins go down. That's why I think a lot of investors are going to be getting out of the housing market. I think they're going to be having their fire sale. So yes, I think it's going to start with the home builders, then I think it's going to go into the investors, and pretty soon it'll get down to the mom and pops. That's just my opinion for today. I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? It's Monday. Get out there, everybody. Have a great Monday, and we'll talk again real soon. Bye-bye now.